Hey guys, welcome to the channel and welcome back to another video. On today's video, guys, we are going to be talking about ETFs, all right, and choosing and picking ETFs. So let's talk ETFs on this live today. I appreciate you guys being here. Hey, just as a heads up, I got a weak signal. Hopefully, my signal will last. And if it doesn't, then we'll have to jump on the YouTube live on my cell phone, but we're going to be talking about how to choose and how to pick ETFs. Help me pick some ETFs today, guys. We're going to be choosing some. We're going to see. We're going to do some comparisons. I'm hopefully going to share my screen with you guys, and we're going to do some evaluation or analysis of some ETFs today, guys. I got a few $1,000s I want to spend. Hypothetically, actually, I do, but we're going to think about that as we look at these ETFs, guys. I'm needing some help. So give me a thumbs up if you can hear me okay. Just a regular old thumbs up will be good that you guys can hear me. My audio checks out all right. And let me know. Let me start off by first, again, welcoming you guys into the live, but also let me know as you come in where you're coming from. And let me know if you own ETFs or if you don't own ETFs. Yes or no on the ETF. Thanks, Brian, for the thumbs up. Appreciate that. San Antonio, good to have you, Kimmy, as always. I appreciate you being here and your support of, I don't know what we call this. Maybe we call it smart money, real talk with smart money, bro. I'm not sure. Okay. But listen, if I get cut off here, guys, because I've had a weak signal all day in terms of internet, if I get cut off, I'm going to jump right back on the live on YouTube at Smart Money Bro on YouTube. I'll jump right back on in a minute or two. Just wanted to give you guys a heads up in case something goes up. Yeah, like somebody said, video is freezing up already. Yep, Steve said that. Let me know if you guys can hear me and let me know how the video looks. Because I've had some issues with my internet all morning, all day. So Quebec, Canada. Wow. Okay. I never had anybody in here from Quebec. And Connecticut's in the house. Good to have you. Raleigh, North Carolina. Virginia Beach is here. Philly is jumping off with VOO and VUG. We'll talk about it. Good evening from Boynton Beach from you. RC, good to have you. Mr. Biz from Connecticut. I already said you. We got Dallas. No ETFs. That's hopefully we can help you and give you some things to think about in this quick live here. And New York tapping in. Good to have you. Somebody said, I'm an ETF junkie. TJ, good to have you. So, yeah, we'll talk ETFs. And again, guys, if you see an issue with the video, just bear with me. I've had some issues going on with my internet all day. And if I get cut off, I'll easily just jump right on my phone and go live on the phone. So you guys we'll keep digging into it, but it'll be a minute or two in between that. But hopefully we can last and we can, we'll see what happens in terms of our connection. Somebody said I have about 5K in stash account. Best way to max it out. Let's talk about it. Maybe you can find some things we talk about here, Brian, and maybe that'll help you out as well. And it looks like a lot of you do own ETFs already. Hey, how you doing, Lenita? Good to have you. So with this real talk with Smart Money Bro, and I don't know really how to name it. I still don't have a name for this Wednesday, Thursday, Saturday live that I do. I'm still working on that. So I want to do a little bit of ETF comparison on this one, guys. And as always, the basics to investing. I always keep the basics in mind. Know your why, right? You have some long-term goals. Develop and write down your plan, whatever your investment plan is. Don't just jump into ETFs. Have a plan, have a strategy, right? Be consistent with your investing, dollar cost averaging, putting the same amount into the market over a long period of time. Super important, right? You don't want to just, jump in, jump out. No, just a set amount all the time. All right. Real simple. Invest in things that you understand, risk what you can afford to lose. In other words, know your risk tolerance, right? And you want to be as diverse as possible, diversify. Don't only have all your money in one stock, two stocks, but these are just the basics. As we always talk about investing, we want to get the basics down, right? Avoid any panic selling. You don't want to do that as well, right? So just some basics. Now, why I like ETFs, I just want to tell you guys this. ETFs are kind of the best of both worlds. If you don't invest in ETFs, hopefully you understand what I'm saying. The best of both worlds, meaning index funds combined with stocks, right? ETFs can be bought and sold throughout the day. Their price fluctuates and goes up and down just like a regular stock, right? But Like an index fund, an ETF is going to be spread across. You're going to have some good diversity around, across a bucket. It's a ETF is a bucket of stocks. Just think of an ETF just like this, just like an index fund. It's a bucket of various stocks thrown into the bucket, right? So your risk with an ETF is spread around. If one of your stocks in the bucket tanks, does horrible, it's not going to bring down the whole bucket because it's just one of many, right? One of 100 or one of 500 or one of 10,000, 1,000, right? Wrapped into one investment called an ETF. So ETFs are kind of sweet like that, right? Again, you can trade them on the market, but at the same time, they're just a bucket of stocks, just like an index fund, right? So things I look for, guys, in an index fund or ETF, guys, and thanks a lot for the thumbs up. I appreciate that, Brian. What I look for, guys, several things, and we'll look at them. Hopefully, we can share our screen here and see them. But the underlying benchmark, in other words, what sectors is this ETF tracking, right? Is it tracking healthcare? Is it tracking the S&P? Is it tracking the Russell 3000? Whatever's tracking, right? I look at that. We want to know that the types of stocks the company is tracking is pretty important, right? What's in the basket? Sometimes you hear that referred to as holdings, right? What's holdings? What are the holdings? What are the stocks that are in the basket, right? At least when I compare them, I like to at least look at the top 10 stocks, especially if it's weighted, right? Also, I don't look at tracking errors too much. I know some folks, when they dig deep, they look at the track because an index fund is tracking a group of stocks performance. And sometimes there's deviations in how it tracks it, right? There's errors in that deviation. I don't really look too closely at that, and I don't want to dig too deep in that today. I want to keep it basic today. But in terms of expense ratio, what does it cost to own the fund, right? 1% or 1% expense ratio, right? Where you pay 10 bucks for every $1,000 you invest. Or is it something like a 0.03, right? Where you only pay like $3 for every $10,000 that you actually invest over the course of a year, whatever it may be. So the key with the expense ratio is the lower, the better, right? The lower, the cheaper for you to actually own that particular index fund, or I'm sorry, ETF, right? So just keep that in mind, guys. And so the other thing I kind of look at when I look at ETFs is who the provider is of the ETF. I kind of look at that. There's like 200, more than 210 or so places that you can buy ETFs and get ETFs from, right? So you want to make sure your provider is pretty solid. Is it Invesco? Is it Vanguard? Is it Fidelity? Is it BlackRock? Whatever it may be, guys. So let's see here. I think we're still good in terms of our strength. A little bit unstable, but let me know, guys, if you're getting a lot of static or if you're getting a lot of, you know, let me just kind of go over here and take a look. I want to see how we're doing. Oop. All right. Just bear with me here because I know our connection is pretty bad. All right. So let's see here. Turn that one. Okay. So we're freezing up, guys, and you can tell me if I'm freezing up. New York tapping in. Good to have you. Philly's in the house. As I said, North Carolina's here. Still got a lot of folks here, guys. And I am going to be freezing up a little bit. Just bear with me, guys. I think we'll make it through. I think we'll make it through. So the other thing I was thinking about, guys, in terms of what I look for in an index fund. I'm sorry, a ETF. I keep saying that, right? Let's see here. Still freezing. I have VOO and the taxable. Let's see if we're freezing up. Little lag video. I hear you just fine. Yeah, we got a little lag time. Looks like our connection's coming in and out. Looks like Arizona's in the house. Good to have you. Be more. Good to have you as well. Like I said, I had a little bit of freezing up, not freezing up. I had a little bit of trouble with my internet connection all all day today. So bear with me. So market price, right? What is an ETF trading at right now? What is it on right? What is it for right now? 200 bucks, 70 bucks, 80 bucks, 40 bucks. I look at that also. Also look at past performance, guys. 3-year, 5-year, 10-year. I don't I do look at the 1 year, 6 month, but I mainly look at kind of a longer term thing because I always buy and hold. So that's some things I kinda look at in general, guys, for, ETFs, and hopefully what we can figure out if we can get our connection right, we can continue to look at that today and look at a little bit of that today. So just again, basket of stocks, basket of stocks, right? So the other thing about ETFs, before I actually share my screen, and hopefully if I share my screen, you'll be able to see it, we won't freeze up as much, we'll see. But there's different types of ETFs, leveraged, and then there's inverse and all these types of different types, but I won't go into those. I just want to stay with the basics, right? Broad-based index funds, broad-based ETFs, growth ETFs, right? Um, but I will look at a few sector ETFs. But I want you guys to sort of help me today in the chat if you can, because again, I've got some cash, some money. I want to invest in some ETFs and I want you to help me. I want you to help me figure out where I should be investing. I want to compare a few of them, right? You can get ETFs in the tech sector, you can get ETFs in healthcare, you can get ETFs in communications. I mean, you can get equal weighted ETFs. There's all different types of structures, right? All different types of structure. Let's see here. Yeah, bear with me on the audio. Looks like the audio's good, but my video's freezing a little bit. So we'll see what happens. Let's see, Fun Life said QQQ, VOO, 50/50. Like that, sounds good, we'll talk about it. With ETFs, you can get exposure to real estate, commodities, anything, guys, bonds, whatever it may be. Easy to get into ETFs, that's another reason I really like it. It's super easy, right? Sometimes with some of the larger index funds, mutual funds, there's a minimum, you gotta come to the table with 3,000 bucks, 10,000 bucks. Some of them have a minimum of 100,000 bucks to get into the index fund, mutual. ETFs, typically 1 buck will get you in almost any ETF, right? You just gotta open a brokerage account and go from there, right? And most times you can get into ETFs, like I said, for little or nothing. That's why they have an easier barrier to entry than, say, other mutual funds or, uh, some index funds, right? That's another reason I really like ETFs. Now, what do I primarily have, right? VPSAX, I got that's an index fund, right? But I do have, like, VGT, I'm a Vanguard guy primarily, but I'm open to all different types of funds from all different providers, right? I've got some dividend in VYM. Me personally, I have some VGT. I have a little bit of VOO, right? I even have a bond index fund that I'm not liking right now, so I'm really strongly considering getting rid of that. So, we'll see. So let me just kinda run through here, guys. We have here from Jupiter, Florida. Good to have you here. Let's see. Should someone wait until they have enough to buy multiple shares? No, you don't have to wait until you have enough to buy multiple shares. You can get in, go to, Fidelity. You can't do it at Vanguard. I don't think you can buy fractional shares of ETFs at Vanguard, but you can go to Fidelity or somewhere else, buy fractional shares. If you don't, or you can just get in with $1. I don't say you need to wait to have a whole bunch of them. I don't think you need to wait to have a whole bunch of, money to get to buy several shares. Just jump into it. Not jump into it, but, go into it and feel free to invest. You don't have to buy several shares at one time, not at all. So, let's see here. Somebody said, "I got all the popular ETF and a lot of money with QQQ and SDHD. Dollar cost averaging is always best." Yes, give me let me share my screen, guys. Let me know how my, connection goes if I actually share my screen with you guys. Let's see here. I think I might be on a slight delay. Guys, let me know if you can see that screen. Looks like you can, guys. I'm gonna do a little comparison of a few of them that you guys brought up because I just want to see what we got right here, and I want you guys to maybe help me with your suggestions. I'm taking suggestions here. Matter of fact, I'm writing suggestions down. By the way, get out my piece of paper. I'm old school, right? So, because I'm serious about this, right? I'm not just doing the video here. I'm actually trying to get some suggestions on what to research and what to look into in terms of buying them. So, let's see what you guys got. Somebody, TJ said, "What do you think about XLF, JEPI, and TQQQ?" Let's look at them. I mean, let's start off right there. XLF and let's look at TQQQ. XLF. Let me see. XLF. Let me see if we gotta pull that up in the ticker. It's the SPDR fund. And what was the other one you said? Let's just start right there. TQQQ. TQQQ or just QQQ. Yep, there you go right there. ProShares Ultra. let's compare these 2. You asked, "What do I think about them?" Let's look. Let's start that off in terms of comparisons and see what we got. And I just go to ETF.com a lot of times, guys. Sometimes I go on Yahoo, but ETF.com has a pretty good comparison tool. I like it. So there's your financial select on the left-hand side, XLF, and there's your ProShare Ultra Pro QQQ on the right. And let's just kind of look at them, see what we got here. It looks like and by the way, the XLF is going to be on the left-hand side all the way down. TQQ is going to be on the right all the way down. But State Street Global offers the XLF. ProShares offers the TQQ. Expense ratio, okay, so we got, 0.88 and we got 0.10. Not too bad on the 0.10. Assets under management, 36,000,000,000 versus I'm sorry, yeah, 36,000,000,000 versus 20,000,000,000 for TQQ. Daily volume that's traded. Let's see here. Okay, so that basically that's tracking the index, the Nasdaq 100, and that's basically tracking S&P Financial Select Sector. We got about 74 holdings in this one. As we come down and look at the 2 on the chart in terms of how they're doing in terms of performance in the last year, we're here on the chart, and, let's keep going. Let's see what else we got. 1 month, TQQ is killing it over the last month and really destroying it over the last 3 months. Year to date, up 15%, and in the last 5 years, up 37%. So TQQ is doing pretty solid, looks pretty well. I'm just comparing them, guys. This is what I wanna do on this, video. Let's see here. Average spread is pretty low. Let's see about the top 10 holdings here in TQQ. Um, okay, nice some T-bills and so forth. Okay. We got a nice chunk of Microsoft and a nice chunk of, the US dollar in there as well. Whereas XLF has some Berkshire and some, Goldman Sachs, looks good. Not bad. BlackRock at 2% as well. So this is what I do, guys. I just come here and do a little quick comparison of them and see what we got in terms of holdings, in terms of performance, in terms of expense ratio. That's kind of what I want to look at. So what do I think about them? Not bad. Not bad. TQQ is really doing well, right? Over the last year or so, actually the last 5 years, it's doing pretty well. 10 years, it's way up. But, 10% is not bad for XLF either over a 10-year stretch as well. So both good funds. Um, have no issues with them. In terms of their top 10 holdings, I don't like to see the US dollar up there, right, in terms of TQQ, but, other than that, I'm fine. I'm fine with some of these here, right? These look like pretty decent companies. I'd have to review the rest of the 70 some odd holdings in there, 64 holdings in XLF, but not bad. Not bad at all. Let me go back here, and that's a great question. I appreciate you bringing that to me. TQQ is dangerous for day traders. Yeah. It is, I can tell. Let's see here, IBIT, I knew I was kinda going in and out of TQQ, and then it was just you gotta be careful about that, right? Bear, bear, bear. That's the kicker on that, so be very careful with the QQQ. Somebody said, let's see here, I got VUG, okay, those are Vanguard, VUG, VGT. VGT's really been strong recently, guys, in the last couple of years. That's gonna be the tech from Vanguard. Got rid of my bond fund with Fidelity. Yeah, I'm thinking about getting rid of my bond fund that I have. It's performed poorly for the last 3 or 4 years that I've had it. Thankfully, I only have a tiny bit in it. I only have a really small bit into my bond fund with, Vanguard, so not very much. Let's see, somebody said QGRW versus VUG. Let's try that one. QGRW. Q versus VUG, I think we said. That's a growth out of, Vanguard. Let's give it a comparison, see what we got, guys. So, Wisdom Tree US Quality Growth Fund versus another 2 growth funds. Always good to compare also, by the way, 2 types of funds that are similar. Here we're comparing a couple of growth funds which are, in the same, you know, sphere, so to speak, in terms of being growth. One has a 0.28 expense ratio, a little more expensive than Vanguard's VUG at only 0.04. Vanguard they have a much bigger assets under management, huge in terms of 111,000,000,000 versus 160,000,000. So let's see here. Index track, Wisdom Tree, US quality growth, and the US large growth, right? So 101 holdings for QGRW versus 221 for VUG. They track pretty close. Somebody said, "Why don't we compare these 2?" Okay, great. As we compare it, see they track pretty close. Let's look at the returns over the last 3 months. Pretty similar. VUG coming in at 14.17 year to date, fairly similar. Not sure how old QGRW is, must not be that old, but if you notice the 10-year track for VUG is still 14%. 5-year track is 18% for that group of stocks, so not bad in terms of, VUG, over the long haul. Average spread, okay. Number of holdings, still again, double the amount, and of course, much higher volume of trading because of much more assets. So VUG, mostly 13% Apple, 3% Facebook, Meta, 12.77 Microsoft, Google's even in there as well in the top 10 holdings, Tesla's there as well, NVIDIA is obviously gonna be there, obviously. Looks like you got your, Mag 7 sitting up here over here. You got your Mag 7 sitting over here too, except throw in Broadcom. Let's see here. So these funds are pretty close. I'm a Vanguard guy. I would probably go with VUG. I think I might even own some VUG. I don't know. But, yeah, these are pretty close. And by the way, I also like to see what kinda sectors they're in as well, guys. Both of them are pretty high in tech, right? So, something to think about as well. So, good comparison there. I appreciate that. QGRW, I'm writing that one down just to do a little further research on that. I think I already have VUG. I think I got a few shares of VUG, not very much. Let's see here, so let's go back, let's see what else we got, guys. Let's see how our strength of our connection's going. I think our connection's hanging in there, barely. So thanks for that one. Somebody said SCHB. Now, SCHB is a pretty popular one, right? Offered by Schwab. Let's throw that in the comparison tool. SCHB and VTI. Let's see, SCHB and VTI. Let's throw those in the comparison tool and see what we come up with. Let's start off with SCHB. That's Schwab's broad market ETF. And I think we said, did we say VTI? Let me go back. Forget. All right, VTI. So we throw in VTI, that's Vanguard's total stock. That's everything, right? That's in Vanguard, that's in the stock market. So we've got Schwab at a point zero 0.03 and Vanguard at point zero 0.03 versus both are super low expense ratios. That means they're very cheap to own, right? Doesn't cost a whole lot to own them. Vanguard's got 365 billion AUM. Of course, that means higher trading volume on a daily basis. Um, SCHB tracks the Dow Jones, and VTI tracks the total market, like I said, right? Number of holdings, right? Let's look at them on the chart here, guys, and let's see. They are tracked together. Let me go down and look at these guys. Yep, everything's super duper close on these guys, as you can see, right? 1 month, 3-month, year to date, 5 years, and 10 years, super duper close, right? This kind of breaks down to, hey, do you like Schwab or do you like VTI? What do you like, right? I mean, they're super duper tracking super duper close, guys. So not much different than these 2 guys. But if you like SCHB, it's gonna be tracked super duper closely with VTI, right? Right? And, top holdings, obviously, and I like to look at that pie chart because 'cause I'm kind of visual. So you see that pie chart, man, that's like identical, right? So, let me and both being weighted, by the way, weighted funds, right? And again, heavy on tech, right? Because you got your Mag 7 up. So super close. Appreciate that one as well. Hey, TJ, appreciate you. I can see it. Okay, CVS, Amazon, Meta. So we're doing this comparing some ETFs, guys. Some ETFs specifically, not necessarily mutual funds, not necessarily individual stocks, just mutual funds, right? And I'm looking for some to invest in. Okay, I'm looking for some to invest in. What is your suggestion for me, right? Let's see here. Somebody said VEA. Not sure which stock that is, which, index fund that is, but we'll check it out. Hey, thanks, JT Coin Rings. Good to have you. Appreciate the super chat, man. Thanks so much. Looks like the strength of our video is getting a little bit better here and there. We'll see, guys. Appreciate it, JT Coin Rings. Thanks a lot. Punisher from St. Louis, good to have you in here. VGT down today for some reason, still great. Yep, I'm a big fan. I actually own some VGT as well. QGRW for the win, says TJ. Can you look up Vanguard, FTSC, All World ETF, ACC? I'm from Europe. Give me a second. FTSC, I think you said, right? If you guys can see my screen or not, don't know. Oh, I'm not sure what that is, so I can't look it up. B&Q in the house. QGRW, big question mark, TJ. Can you okay, so B&Q, BWCE. Let me look at B&Q real quick. I've heard a lot of things about B&Q. Let me pull up V&Q and let me compare V&Q to here it is. Alright, that's the real estate. Yep. So let's see. Let me and you don't have they don't have to be in the same sector, right? So if I pulled up V&Q and compare it to BWCE, right? BWCE may not be in the same sector, but I wanna take a look at it. Alright, let's see here. BWCE, QGRW. Let's go with that one. QGRW. Yep, because we had QGRW up here earlier. Let's kinda take a look at how V&Q compares to that. Okay. Keep it in mind, real estate and a growth fund, right? Kinda 2 different areas. Hmm. V&Q for the year, down. Of course, the year's only a few months old, right? Or a couple months old, a little less than a couple months. Uh, Here's its performance over the long stretch. Not great, not horrible, but not great, especially over the long 10 years. Not sure how long V&Q's been around. Average spread, not too bad, means it tracks it pretty closely. Looking at its holdings, real estate index fund, institutional plus shares. It's got a 3% in public storage, which is probably growing. We all know that the public storage sector is always is growing because in America, we have so much stuff, and more stuff. Um, Simon Property Group. So what I would probably do is do a little research on each one of these top 10 holdings and see what we got. I'm not a huge fan. I don't have a lot of real estate outside of physical real estate. I know some folks like it, but I don't have a lot of real estate outside of physical real estate. All right, good one though. Appreciate you throwing BCWE in there. I'm sorry, and throwing V&Q in there. Appreciate that. Let's see here. Somebody said hold SCHD and SCHG, then they complement each other. Cool. Happy day before Friday. Good to have you, Tony. All right. SPY versus QQQ. Let's take a look at that. Appreciate that, TJ. SPY versus QQQ. Let's go back over here and take a look at it. You guys are helping me here, all right? Making these suggestions. I appreciate it. This is what I do when I look at index funds, right? What to invest in, right? And I'll show you what I got in just a bit. I think that's Invesco's QQQ you were talking about. Let's see. There it is. All right. So here we got SPY offered by State Street and Invesco's QQQ. Looking over here, we got an index, a expense ratio a little bit higher for Invesco at zero point 0.2 versus 0.09, which is pretty low. Whenever you see a zero right there, right, you know it's pretty low. Assets under management, a little more for State Street. And we got 504 holdings, 504 companies versus 102 companies. That's going to be S&P. That's going to be NASDAQ 100. Let's look at them fairly closely, right? Fairly closely. QQQ being a little bit higher, obviously. And 1 year, a little higher, 3 month, a little higher, year to date. And of course, 3 years and 5 years, so if you're in it for the long haul, which I'm always in it for the long haul. 10 years at 18%, pretty good, pretty good. 5 years at 21% is pretty solid, pretty solid. QQQ got a good reputation, I know that. So, spread-wise, okay. Like I said, I don't focus too much on the spread. I like to glance at it. But then we look at holdings, right? And Microsoft has a big chunk of SPY and a big chunk of QQQ as well, right? So that's the top 10 holdings, okay? And as you look, I also looked again, like to look at the sectors. QQQ being heavier in technology and electronic technology, and SPY including some finance, right? Including some finance, a little heavier on the health services for in SPY, right? A little heavier on the health technology, SPY as well. So let's see here. So just something to think about, guys. And that's a breakdown of its sectors, by the way. Okay. So not a bad comparison, TJ. If I'm looking at those two, yeah, we got QQQ a little higher right now. If I'm looking at those two, I'm saying, okay, what's my performance? QQQ is doing really well, right? Really well. And don't get me wrong, 9% over 3 years, 14% in 5, and 10% and 10 years at 12.5. That's pretty high as well. There's nothing wrong with SPY as well. So I like that. Thanks for giving me that suggestion, TJ. Appreciate it. Let's see here. Paul said FDVV, I'm sorry, versus SCH. All right, let's take a look at it. FDVV. It's going to be that high yield from Fidelity. All right. So we got dividends, which are both these are dividends, right? That means they offer you a dividend. So Fidelity, one's offered by Fidelity, one's offered by Charles Schwab. Expense ratio from SDHD is pretty low, right? Much more assets under management, much bigger AUM, although bigger AUM, but about the same amount of holdings. So that tells me they got bigger companies over here in this SDHD than we have over here in this Fidelity. So average daily volume again is way higher, right? They're similar tracking, right? Similar, right? With FDBV being a little bit higher from Fidelity. And so as we look at this, guys, over the course of 5 years, just jump to the 3 and 5 year, we've got an 8%, but we jump up to 12%. So these are not bad, both pretty good, right? In terms of growth. Let's see here. Cost, same, similar. SCHD being very cheap to own, much cheaper, but this is very, very cheap, for you guys. If you're looking at expense ratios, that's not bad, not bad. This is not bad as well. Obviously, much better. I said point 0.1, meant point 0.06. All right. So in terms of holdings, though, top 10, Microsoft is big over here. Let's look how we got our spread over in SCHD, but looking at our spread fidelity on FDVV, not bad. Good spread. Big companies, Microsoft and Apple, ExxonMobil. Let me look at sectors real quick. FDVV, heavy in finance, right? Heavy in ET, electronic technology, and health technology, again, as we talked about with SDHD is pretty high. But that's kinda how they're spread out, right? Not bad. Good comparison there. I'm gonna check out FDVV a little bit later and do a little bit in that one, okay? I'm taking notes, guys. I don't know about you, but I'm taking a few notes because it looks like we got some pretty good ones here. I gotta skip down because I'm a little bit behind. Let's see, GLD versus IBIT. Let's see here, SCHD versus GGRO. We crazy. Glad I'm not the only one. This house looks great to me, but I'm here, right? BQ, can't compare it to it. I'm not sure what you're talking about there. These are all fun. These are all the funds I found. Charlotte, I'm just kinda skipping down because I don't wanna miss a lot of them. I'm kinda slow. QQQ versus VGT. Did we do that one already? Let's give it a shot. QQQ versus VGT. I think we did that already, right? I think we did that one already. So I'll skip that one. Let's see here. Q is the third child you love. Boom. QQQ is the holy grail. QQQ is killing it. QQQ versus QQMG. Let's give that one a shot. QQMG. Let's see. Let's see. Yeah, QQQ is pretty popular out there. It's from Invesco again. Both of these are from Invesco, right? One's tracking the NASDAQ, looks like. So, same, similar. Yep. Obviously, the one tracking the NASDAQ is gonna be have a little bit lower AUM. That means obviously lower daily trading. Both tracking about 100 funds, and of course, tracking similar, no issue there. All right, good deal. They look super close. So, sweet. Thanks for that one. Let's keep going. This whole show today, guys, is trying to figure out what I need to buy because I've got a few $1,000s I'm looking to do some purchasing with, and I'm a Vanguard guy, but I don't mind looking at Schwab. I don't mind going over to Fidelity. I don't mind going over and getting some State Street, all that good stuff as well. How you doing, Elvira? Good to have you here. Let's see, Queens, New York. That's okay. It's okay being over your head, Elvira, but this is the type of thing that you're gonna wanna do when you're buying, ETFs. We're just purchasing ETFs and looking at ETFs, exchange traded funds. Again, ETFs is just a basket of stocks. That's all it is. It's a bucket full of stocks, okay? Not anything more fancy than that, right? Let's see, let's keep going here. Late to the show. That's all right, Mark. Good to have you here. 2 I like are Jeppy and JEPQ. No, they weren't mentioned. Let's pull them up real quick. Jeppy and JEPQ. Jeppy and JEPQ. Let's look at them. And those are JP Morgan, right? ETFs, by the way, from Morgan Chase, JP Morgan. I want to say Morgan Chase, JP Morgan Chase. All right. So, all right. Good, good, good. One's premium income, equity. Another one's equity premium income, right? Both similar, super similar, right? We're gonna see some differences down the road, I assume here. Uh, one of them's got 120 stocks in the bucket, one's got 85 stocks in the bucket, right? Similar, right? Although JEPQ is killing the game, JEPI is not doing too bad either, right? The 10% return so far in the last year is not bad, or 3 months, right? And so, like JEPI and JEPQ, not bad. Over 1 year, 10% a year is good, guys. When you're seeing 33%, that's enormous when you're talking about returns. 10% is a little more normal, all right? So let's see what they both have in terms of a spread, right? Not bad. In terms of, top 10 holdings, little more spread around in terms of weight. Of course, your equities or others is high in both. Let's see, Alphabet's big, Microsoft Corporation's huge over here on JetQ. But these are pretty similar. Let me see what their sectors look like. What are they holding? A lot of technology in JEPQ, a lot of electronic technology, and a lot of technology services over in JEPQ. Of course, they're doing well, 33% returns, right? Because of technology, right? Technology is going crazy in the last year or so, guys. Year 2, 3. Um, Finance is over in the JEPI, right? Which is, JEPQ doesn't have hardly any finance. So, sweet, not bad. Throwing those out there for me. Those are on JP Morgan here. All right, cool. Let's see here. KPMG, $20 same returns. SMH, I don't know what that means. Shaking my head. Or is that a ticker symbol? All right, so SPLG versus FTEC. Huh. Let's see. SPLG. Let's take a look at them. Somebody said something about that is from Richard. SPLC. I'm sorry, SPLG. Let's look at that. We're just comparing. I want to look at them. Listen, this is probably for a lot of us, right? Because there's a lot. Listen, there's 2, 3, 4, 5,000 different ETFs. Okay, there's tons and tons and tons of ETFs, and so sometimes you miss them and you don't know what's out there, right? That's why I'm trying to get you guys to help me out. FTEC. Let's take a look at that one as well. FTEC. So we're looking at Fidelity and we're looking at Schwab. SPLG versus FTEC. Schwab, State Street. Sorry, I said Schwab. All right, so expense ratio, a little bit higher in terms of this Fidelity fund over here, FTEC. Both of them, nice huge amounts of AUM, 30 billion here, 9 billion here almost for FTEC. Daily volume trade bigger on SPLG. One is tracking S&P 500 for State Street Global, and one is technology, right? Technology. Number of holdings, 310 versus 505. They track similar. They track similar, but notice that FTEC is tracking a little bit higher, and its return um, hmm, high over the last year. So let's see here. Month over month, 7% for FTEC, 14% in 3 months, 41% for the year. Looks like VGT. That's pretty hefty right there. Must be full of tech. Full of tech. Let's see here. 3 years at 11%. Not bad. But look at the track. Look at over 10 years, man. 10 years for SPLG. That's good. That is phenomenal over the last 10 years right there, right? FTEC is phenomenal over 10 years. Let's keep going. Expense ratio is gonna cost you a little less money to actually own SPLG than it will to own FTEC, but still very low expense ratio. Super low, right? Let's go down here and look at top 10 holdings of FTEC. FTEC is looking interesting to me. I'm gonna write that one, actually. That one's looking kind of interesting to me. Although I do have VGT. Now, just so you know, guys, if you have an equivalent on another platform, you don't necessarily have to get the same things on 2 different platforms. Be careful about that. So if I already have VGT, which I don't have a whole bunch of VGT, we'll see. I may jump in and get some FTEC and get rid of my VGT on the Vanguard platform. Who knows? But looking at FTEC, 2% of it is Adobe, 21% is Microsoft. That's pretty hefty. That's pretty hefty with Microsoft at 21%. That kinda troubles me a little bit, to be honest with you, right? Having 20% of your ETF in one company is pretty hefty. Matter of fact, 19% is in Apple. I don't know if you guys can see that. 19% in Apple, therefore you got about 40% wrapped up in 2 companies with FTEC. So this is my observation, whoever put that one in the chat, I don't remember, but I would say be careful having 40%, almost 50% wrapped up into 2 companies, right? And if we throw in NVIDIA, which we know NVIDIA is killing the game right now, right? NVIDIA is like skyrocketing, right? But then you got about 45%, and then you throw in Broadcom, you got about 50% of it in 4 companies, right? 50% into 4 companies. Something to think about. Remember, ETFs, we want some diversification with ETFs. Me personally, that's the whole purpose. One of the whole purposes of getting an ETF is so that you're spread around. But if 50% of your bucket is only 4 stocks, heck, you almost might as well just own the 4 stocks individually, right? So you just gotta be careful about that. SPLG, while not the same returns, at 4%, 5% year to date, 22%, and 10% over 3 years. That's still pretty nice, but it's a little more conservative because it's spread out much more, right? Microsoft, those top 4 companies I mentioned, Microsoft, Apple, NVIDIA, Amazon, and maybe Alphabet, Google, they only make up 9, 15, 20, about 24%, right? Whereas over here, they make up about 50%. Over here, they make up about 23%. So this is a safer bet, SPLG. It's a little bit safer, because over here, you're taking a risk by having 50% of your portfolio wrapped into 4 funds, just something 5 funds. Just something to think about. So good comparison. Thanks for throwing that one out there, whoever threw it out there. Dope Law, I think it was. Thanks so much. Let's see, and boom, 33% annualized in 5 years. SPLG is my biggest holding, the best investment. Hey, somebody earlier said, this topic is a little bit above my head. What you should do is really start to look through the chat because you will learn a lot about ETFs, what's good and not good by just going through the chat and seeing what's out there, seeing what people are putting in the chat, and then going back and always doing your own research. I mean, Tony Fernandez is a great guy. Tony Fernandez in the chat, he may not have all the answers for you and your portfolio. He may put something in the chat like a QQQ or something like that, or SMH, but you have to still go and do your research, right? I may say that, AIQ is a good one to look at, or FTEC is a good one, but you still have to go back and do your own research. Very, very important, right? Let's pull up SMH. What should I compare SMH to? Let me pull it up. Let's take a look because I keep seeing the SMH going around there. I wanna look that one up real quick. Let me pull that one up, and let me pull it up next to, say, a VOO. They might be 2 different things, but let's 2 different, areas, but that's okay. Let me take a look at let me not take a look at VOO. Instead of VOO, well, let's stay with VOO. I was gonna go iVOO and iShare, but let's stay here. Alright, so SMH offered by Van Eck, 14 billion under management, right? But a huge amount of daily volume as compared to VOO, right? VOO has got 401 billion under management in that bucket, and they do about 1.95. SMH only has 14.6 in that bucket, but they do about 1.26. So, but listed semiconductor 25 index. Okay, that's what it's tracking. 26 holdings in there. So let's look at SMH. Yeah, looks like it's been killing the game here, doing really super duper well. SMH, another one you guys might want to write down, might want to do a little research on, right? If you look at the 1 month, if you look at the year to date, I'm sorry, the 1 year, huge. You look at the 5 year, 33%, the 10 year, right? So SMH it's had some hefty returns, and so maybe you should do a little bit of research on SMH. I'm just gonna do it for you real quick. It's the Van Eck Semiconductor ETF, and you guys can't see my screen over here because 'cause I'm still looking over here, and I'm looking at a different screen right now. But, because I pulled up Van Eck, right? I pulled up SMH, right? That's the ticker symbol. Trading at 202 dollars right now. Yeah, had a steep incline recently, and it's gone up. It's gone up and up and up and up and up. Had a couple of dips in the last few years, 5 years, but for the most part, it's gone way up, right? And it's one to watch. I mean, it's on the list of Market Watch. I'm looking at Market Watch list right now. So SMH is on that list right now, right? I don't know exactly specifically what's happening with it, right? So don't quote me, but, if you're looking for something that's gonna fire you up and maybe get you a big return quick, or soon, right? Maybe SMH might be one for you. So thanks for bringing that one up, whoever brought it up. I think it was Tony that brought that up. Thanks, Tony. Let's see, SPLG is my biggest holding, the best and best BOO. Yeah, I shake my head. Let's see, check. Yeah, SMH is blowing folks out of the water right now. Let's see here. Adrian said SCHD, IBIT, biggest day one splash in ETF history and continues to break ETF volume records. New technology worth a small allocation. IBIT. Let's pull up IBIT. Let's look at it. All right. See if we're in it. If we're here and I can get to it. IBIT, Bitcoin. That's a Bitcoin one. I should have known that one, right? Let's pull it up. Let's just pull it up and compare it to MGK. I'm not sure if you guys know much about MGK, but mega growth. Let's just see what the 2 look like. You can compare any ETFs on this tool, right? By the way, this tool is from ETF.com, guys. There's tons of tools on ETF.com. I also like ETF Replay. I don't know if you guys are familiar with that one. I like that one a lot. Of course, you got Morningstar and some other places where you can. I think Morningstar, you can get a free trial right now for 7 days, and this is where you can do your research for ETFs. Morningstar is solid, but I think the month over month uh, amount that cost is like $30, $35 a month or so, for Morningstar. That's for your serious people that you wanna get super serious, you wanna be comparing these things, and you don't want the free stuff like I'm looking at here. You wanna go deeper, Morningstar is not a bad choice. It's just gonna cost you a little money. It's the BlackRock Bitcoin is what IBIT is, right? And it's a super duper new, obviously. All Bitcoin ETFs are super new. And as we look at it, IBIT is there compared to MGK. If you guys don't know what MGK is, you'll see in a bit. Not a lot of history on IBIT, obviously, because it's brand new. Look at MGK over the last 5 years, 19%, 10 years, 15%. Own a little bit of MGK, by the way. I'll let you guys look at it. But here's the expense ratios on IBIT and on MGK. Let's look at holdings. Obviously, it's tracks ETF, Bitcoin ETFs are tracking the Bitcoin. Tracking the Bitcoin. That's what the price of Bitcoin is what they're tracking. MGK, on the other hand, um, I do own a little bit of MGK, but again, notice how MGK, you've got Apple at 50, almost 15%. You've got Meta, I'm sorry, Microsoft. No, that one's Meta, actually. Meta is holding, no, that one's actually Microsoft holding 14%. Meta's holding 4%. So one, two, three, four, five, six companies have about 50% of the share. That's why I only that's one of the main reasons I only have a little bit of MGK, just a little bit, because of the lack of diversity of that fund, right? At the top. It's top heavy, so to speak, right? So in terms of sector wise, again, IBIT is tracking the Bitcoin price, and MGK, I'll just pull this back up. Let me go back over here, guys. Let me go back over here. All right, so I know I'm a little late on these and I'm way behind, but this is what I want to do, guys. This is the whole point of this video, and I think my video is kind of hanging in there right now, and I appreciate the video for hanging in there with me. I know it's been kind of choppy because I had a horrible service, um, but I'm just trying to get a feel. And if you're just getting here to the show, guys, rewind it back. We're just trying to compare some ETFs, right? We're trying to look at different ETFs and say, what's the best ETF? I have some cash to actually invest, right? Um, and I already have a little bit of MGK. I already have some VGT. I've got some VYM, right? I even have a little BLV, which is the bond index fund, which I don't like. I'm going to be getting rid of. Don't have a ton of it, but I got a little bit of it, right? So and then not to mention, you know, I like I like the broad stock market. The VTI. I'm a Vanguard person, so whatever that equivalent is to where you guys are, where you like to actually buy your ETFs, whatever that equivalent may be. But that's kind of are am I or you could be an SDHB person, an SPDR person, an IVV person for iShares, but I like the Vanguard broad-based funds, ETFs, right? I don't mind the growth funds either, right? The VUTs and some of those as well. But I just want to kind of compare because when you're shopping for ETFs, sometimes it could be overwhelming, especially if you're a new person. I can understand how you feel, right? You don't know that VYM is going to be more of a dividend fund, a dividend ETF is going to be paying a dividend out, right? Same with SPYD, VYMI, right? Dividend funds, right? So I like to say, hey, how do we look at some trackers to actually compare the two? Compare two or three, right? And that's the whole purpose. Guys, don't forget, I didn't say it earlier, but smash the like button for me. Please, the best way to support this channel is to share the video, share the link. I know we had some technical difficulties here and there, but still share the video, share the link, and at least you're getting the audio, right? Because most people they don't really necessarily listen or watch it. Not most, but a lot of people don't necessarily watch it, but they listen to it. And I think my audio has been pretty good throughout the entire broadcast. But again, don't forget to hit that like button. I got free stuff in the description box below as well. Be sure to check that out. Somebody said SAX, or I'm sorry, SAXX versus SAXQ semiconductors. Let's pull that one up. Let's see what we got there. I think it's SAXX. Let's do an ETF comparison. Okay, must be XSOXX. My apology. SOXQ from Invesco. So sometimes, guys, I come on here and I talk about something that we want to, something in the U.S. economy or something regarding managing your money. But this video is a little bit different, right? I'm just taking suggestions on comparing different types of index funds. SOXX offered by BlackRock and SOXQ offered by Invesco. Now, we're just comparing them. Uh, much bigger AUM for the one offered by BlackRock, SOXX. Both are semiconductors, dealing with the semiconductor group of holdings, 31 versus 31. I'm assuming that they are, yes, they are super duper close, no issue, right? No issue. Still up, still up. Let's look at the 1 year on both, 40 some odd percent. Look at over 5 years and 10 years for SOXXX offered by, BlackRock, got a pretty good track record. Not bad, not bad at all. I appreciate the suggestion on that. Let me write that one down. Write both of those, okay? Okay. Alright, so looking through here, obviously, they're gonna be heavy, heavy, heavy on NVIDIA, right? Also heavy, heavy, heavy on, advanced micro devices, both of them are, alright? ASML and LAM, Taiwan Semiconductor. So this one, they both look similar. Again, top heavy, both top heavy. 5, 6, 7 companies take up 2, 3, 4, 5, 6 companies take up half the bucket. 6 companies, half the bucket on both, but steep returns over the last few years or last, year, and of course, for SXX for the last 5 or 10 years. Semiconductors, alright? Keyword, write that down, guys. Semiconductors, write that down if you're scoring, if you're taking score, right? Thanks for that suggestion, I appreciate that. ETF wars, somebody said, yeah, this is the ETF wars, but what it does, it gives us a chance to say, "Hey, what looks like what?" A lot of this also depends on, where you're buying these things at. If you're a BlackRock person, you like the BlackRock shares and ETFs, go for it. If you're more of an Invesco person, if you're buying over on Fidelity, fantastic. If you're buying over on Vanguard, great. Let's see here. Somebody said, one thing I do in my Fidelity is hold all 11 sector ETFs, and I dip buy on a day. I'm buying or filtered high to low on the 52-week break. True. Now, Mark is going all in, right? Everybody in the chat's not gonna go all in like Mark. I appreciate you dropping that insight, Mark. Um, not gonna go all in. Let's see. Somebody said, agreed about checking the chat and doing research after I'm on my phone, and we'll use the rebroadcast. Absolutely. This is what I wanna do. I want us to I'm learning, you guys are learning, and being hipped to different ETFs that are out there in the chat, which I appreciate, guys, that are in the chat and participate. You're gonna learn a lot about ETFs, even if you're brand new and you don't have any or you have 1 or 2, there's a lot out there. Thousands and thousands of ETFs that are out there, and they're in different sectors, and as you notice, semiconductor, technology blowing up the last 3 or 4 years, 5 years, right? So yes, go back and check out though this chat because you're gonna get a lot of information through the chat. Let's see here. Fantastic. So listen, guys, I the whole point of this was to see what's out there. So I got a bunch of things written down from some stuff from the iShares, from stuff to the Charles Schwab. I got the JP Morgan, a couple of them from JP Morgan I want to look at. And I even got a couple fidelities as well. I think I got 2 or 3 from I don't think 2. I got 2 from Fidelity as well. So you guys are helping me out because I'm looking to invest a few $1,000s into a couple of good ETFs, right? And that's how I compare my ETFs. Not only on ETF Replay, not only on ETF.com. Again, Morningstar has a free trial going on right now. but there's a lot of different places where you can actually go and do your own research to see what's out there in terms of ETFs, right? You don't have to necessarily follow or do what I'm doing. You don't have to follow or do what other folks in the chat are doing. You can do what you are gonna do, right? What you wanna do that fits your style. And I always suggest this, if you're a beginner in ETFs, start off with basic, broad-based index funds, something that's tracking, something broad, Russell 3000, Nasdaq, whatever. Could be the S&P 500, could be the total stock market. But whatever platform you feel comfortable with, get on that platform and just do something basic to get started. And then take a look at it, every couple of weeks or so to see how it's doing so you can kinda track it. But always, 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 please do the research and don't forget the basics of investing, the basics of investing, right? That the principles that don't really change, right? The consistency, the having a the investing in things you understand, spreading your risk around a little bit, right? You want to diversify your investments. And again, you don't have to overlap either, right? If you have, VOO on one platform that covers, I think VOO is going to cover the S&P 500, you don't have to have the same coverage of the S&P over on Fidelity, right? You don't wanna have too much overlap, right? Because it just doesn't make much sense. It doesn't make sense to have too much overlap, right? So, just be careful about that in terms of investing in ETFs, right? And again, of course, always avoid panicking, right? You see things happening. The whole I'm a long-term or long buy and hold type of investor in terms of ETFs, right? So, I'm not looking at, you know, 1 month fluctuations or 3-week fluctuations in the market, right? I'm looking at things on a 3-year scale, on a 5-year scale, 10-year scale, okay? So just something to think about, guys, as well. So I'm not gonna bore you guys with any more ETF comparisons, but I just want to have this conversation because I think somebody would be helped out and blessed by it when they're looking to do their investing, when they're looking to dig into and look into ETFs, guys. Again, hey, I'm not gonna hold you up. I'm gonna let you get out of here and let you get to the rest of your day. I appreciate you guys being here, and I appreciate you hanging in there with the bad video, right? I know I had some bad video. I'm surprised I lasted a full hour. But if you, were here, I certainly appreciate it. Pass this information on to somebody because there's a lot in the chat that somebody's gonna be able to get and somebody's gonna be able to get information from, right? Looks like we had a whole bunch more. I just got a refresh in my chat. Looks like we had a bunch more come through here. I'm talking about SPLG. Did we see that one already? Yep, there's another one. Let me write that one down. I forgot to write that one down earlier. All right, SOXQ is what I wrote down. I think I wrote down SOXX earlier. But again, guys, I appreciate it, guys. Thank you so much for being here. And listen, guys, do me a favor, check the description box. There's other videos. There's some free stuff down there. I partnered with Mint Mobile on this one as well. Save on your premium wireless services, right? Mint Mobile is a good place to be. I got them. They work well for me. No drop call like that. Still using the biggest 5G network. It's just that my bill was cut in half when I went to um, Mint Mobile. So check out Mint Mobile in the description box as well. Uh, if you have any comment, any question, drop it for me, right? Drop it in the comments section of this, and I will take a look at it and leave a message and reply to your comment. All right. We're going to be back on here Saturday, 11 o'clock a.m. Central Standard Time, hitting another topic super duper hard. And I just appreciate you. Big shout out to you and thank you for showing up. And thank you for all of the great information you put in the chat. Thanks to you, I think I got some direction on where I want to go with ETFs. All right. Hey, the best person who's going to take care of the old you is the young you. Guys, take care of yourself and take care of other people. Until the next video, peace.